world, you've got the DAX. Talk about being up, down, all around. You've got the DAX up, or down, I'm sorry, down 2 points. So flat there. You can do some water scan. The FTSE's down 11. Over in Asia last night, you had the Nikkei up 66 points. You had the Shanghai up 43, and the Hang Seng up 186 points. Again, our call number is 877-927-6648. And, before we get to the markets, this week I really was talking about, there's two primary fears that always hold each of us back in life. And these are fears that you absolutely have to learn how to conquer. That's why I want to be able to help take you to a place of strength. Because when you're dealing with fear, you absolutely want to make sure that you are coming to a place of strength. And there's 5, enemies. Well, there's more than 5 enemies, but there's 5 primary enemies when we're dealing with our fears. Either those fears of not being loved or fears of not being enough. And those 5 enemies, we talked about them a little bit this week, indifference. And for me, when I just try to apply things that go on in life to the marketplace, because that's what we take a look at in the market here when we take a look at these charts, it's nothing more than the emotion. And emotion is progress because it's emotion. Motion is progress, moving forward. And that's why you don't want to be, folks, you do not want to be a prisoner of your past. And so many of us are because, the reality is the past doesn't equal the future. The past can absolutely help to paint your pathway, to growth if you want. And, one of the things that you need to be able to just simply battle, one of those enemies is certainly indifference. When I take a look at the marketplace, what indifference means is just not respecting the fact that the market may go up on lighter volume. When the markets go up on lighter volume, when it does fall, we can always pinpoint where the market is going to fall to. It's going to be the last sign of strength that's out there, which is going to be where you've got institutional investors. We're going to see it, I'm sure, this morning. When the market opens, we're going to go to stocks that drop, ones that have got the highest percentages. And when we go take a look at that, we'll see that they're coming to a logical area. That's why any holdings that you're in, doesn't matter to me whether it's Apple, Priceline, Amazon, whatever it is, go take a look at that stock chart. You want to get a stock chart out. You want to understand where you are and where that can go to. If you don't, then you're not battling indifference and you're not preparing yourself for what is likely to happen at some point in time. And what that leads to is what we'll call indecision, because you're not sure what decision to make. Well, the decision that you should always make, folks, is taking some type of actions. And, because not taking action, and most of us don't think about it, but there is a huge cost. The bigger cost is not taking action. Why? Because you just simply are letting time slip away. And, money is something that you can make back in a heartbeat. But time, there's no way to get that time back. So you want to battle that area of indecision that's in your life, and then doubt. That's a real bad enemy because, you do not want to be able to doubt yourself. If you're doubting yourself, then do what it takes. Get some books, get some coaching, get some training if it comes to these markets. Don't doubt yourself because this is an opportunity of a lifetime to truly understand these markets, how they move, the breathing patterns, the non-random patterns that exist in almost, not every stock chart, because there are psychotic stock charts out there, and you can't understand that behavior, right? We know how that is in life. But for the most part, there are patterns that are out there, just like you've got patterns in your life. That's what you see inside the market. And they're non-random patterns. They're ABCDs. They're sacred geometry, 0.618, 0.382, 0.786. Those are the contractions. That's just simply when you're pulling back, whether it's in life or whether it's in the markets. And then there's that expansion. There's taking out the B point with volume. Or if you don't, you're setting up one of those tiger butterflies. And, those are the expansions of 1.272, 1.618. So what you want to do, folks, you want to find, because I think the worst enemy of all is absolutely doubt. Because when you start doubting yourself, it stops you from taking action. And you just don't want to do that because you pay the highest cost that is imaginable, in my opinion. You've got that fourth enemy out there. We call that worry. Maybe you're worried about your investments. You're worried about the market. So you want to understand where volume is, where support is in the marketplace. And what you want to do with worry is worry's not going to do a whole lot for you. What you want to do, you want to take all the things that you're worried about, pack them up in a ball, and throw them out the window or put them in a corner, put them in a timeout. Just like you would a child, and just simply get rid of all that worry in your life because it's not going to lead to anything other than stress. And stress is no good for us. Then you've got the folks, the last enemy that you'll deal with is just simply being overcaution. And overcaution, folks, is a lot about being able to, maybe you're trying to just simply be too perfect. And you know here, at least at the Trader's Edge, at least in my mind, perfection is something that just doesn't exist in life. Why? Because it is something that cannot be attained. So don't, shoot for perfection. Just shoot to absolutely be outstanding. Why be outstanding, folks? Because that is where all the extraordinary rewards are in life. So, how do we deal with the battle before we go on to the markets? Because, markets, not a lot of big battles going on out there right now, relatively flat. But I say do battle with those enemies, folks. Do battle with your fears. Absolutely do battle with your fears. Become courageous. That's what it's all about, because when you can become courageous, then you've got the fight in you. And it's just a matter of just shifting. It's just one little decision. It's just a matter of shifting that decision. So what you want to be able to do is be courageous. Be courageous today, each and every day. Let's go take a look at these markets here. Let's go take a look at the S&P futures. That's what we've got up here on my screen right now. What you can see after it made the lows coming into 2 trading sessions ago at about 3 o'clock in the afternoon, got down to a low of 1352.50. This is the 30-minute ES mini that we've got up here. And what you can see is it made this bullish engulfing pattern here. That's bullish engulfing, folks, is where you've got the body of a candle. In this case here, we're taking a look at the entire body. When you see a green candle on my charts, and maybe it's not green, maybe it's a little off color on your screen, but when you're taking a look at the green candles, or the greenish candle, I should say, on your screen, the greenish candle, when you take a look at the body, the bottom of the body is where the equity opened, and the top of the body is where it closed. That little wick to the top or on the bottom, that tells you during that session, in this case here, a 30-minute session, how high it traded to and how low it traded to. You're taking a look at the bodies here. You'll see that this bullish engulfing candle that was created on the 30-minute chart, this went ahead and engulfed 1, 2, 3 trading sessions here, telling you that there was some good strength behind it, and you had some confirmation on the following candle. That said that, the bears, that was enough of all the action for the bears for the time being, and I do believe it is a time being. And you can see now that, you've got a trend line. You kind of broke through that trend line here a little bit as we came into the 9 o'clock session. I think that was a result of maybe an unemployment report that was out there. We'll see how the battle here in the ES Mini is going to unfold today. I do expect that we will see the markets kind of push up. That indifference, if you will. We'll see the markets go up without any conviction, just getting ready for the next kibosh to the downside. And that's what the markets are absolutely telling us. You should prepare for that, folks. Prepare for the worst and plan for the best. So you want to make sure that you prepare for that. That's on the ES Mini. If we go simply just take a look around the world here, let's go take that tour around the world, see what we've got going on out there. Real quickly, what we got up on the screen here is the DAX. And what you see with the DAX here, folks, is the DAX as it was coming down 2 trading sessions ago on Tuesday. It was coming down into the swing point low from March the 7th. Got just below that, rejected that yesterday. You can see what the DAX is doing is just simply trading inside this uptrend channel. The true breakout, folks, will be to the downside, but looks like this area is going to hold just for a little bit longer. 877-927-6648. Be courageous, folks. There's nothing like it. We'll be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Dow futures up about 17 points right now. ES mini up 1.75. And, if we take a quick look, what I've got up on my screen here is the New York Stock Exchange monthly chart. Now, it's only today is the 12th? Yeah, because tomorrow is Friday the 13th. Huh? Didn't think about that. That's great. That is a lucky day out there. If we take a look at the New York Stock Exchange here, and the reason I have that out here is I do want to point something out to you. Obviously, we've got more time left in the month here, but what you don't want to see in the New York Stock Exchange, and look, what you want to absolutely make sure that you are taking a look at is if you look at the month of March. So last month, the New York Stock Exchange, the open on that, we're talking about candles, talking about the green candles that I've got up on my screen. And so when we're taking a look at this, you see that the candle here in March opened up at 81.36.13. You're trading right now at 79.12.85. Now, the close on that candle for the month was 82.06.93. You will see that in the month of April, we opened up at 82.06.94. 1 penny above that. That's really critical because when you open at or above the prior session, in this case here, the prior month, what that sets up is a possibility of a bearish engulfing candle. And on a monthly basis, folks, that will be real significant. Real significant because you did break out of the pull that over there. But you did break out of the downtrend that was really established going back to the May 2011 highs. And if we do end up with a bearish engulfing candle here, that would be, folks, a close below 81.36.13. That is a very ominous sign. And these candle patterns, folks, they're really good leading indicators. We take a look at Gartley setups, butterfly setups, retracements, using sacred geometry or expansion. Those are really the best leading indicators because you can paint those patterns in advance. You absolutely can when you start taking a look at expansions and contractions of swing points. But then what you also want to make sure that you've got in your arsenal is you want to make sure that in your arsenal what you've got are candle patterns, understanding bullish and bearish engulfings, hammers. Just understanding a few candle patterns will help to allow you to understand what's going on in the market, what the traders are absolutely communicating to you. So that is on the New York Stock Exchange. Let's go take a look at King Dollar. Speaking of bearish engulfings out there, King Dollar yesterday, you can see here we've got the U.S. dollar index. Again, this is the basket of currencies. This is a basket of currencies, including the euro, including the pound, including the yen, the Swiss franc, the Swedish krona, and what's the other one that I'm missing out there? That's okay. And one other currency, and it's a basket of currencies, folks. And what you did have happen yesterday was a bearish engulfing candle. That says that the U.S. dollar index wants to pull back a little bit. Where would that normal pullback be to? Well, first, the normal pullback, folks, and what you're going to do is you just simply take your retracement tool and you go from the bottom to the top of a swing point when you're doing a retracement. In this case here, the bottom was the bullish engulfing candle that was put in on the U.S. dollar index on April 3rd, so that low of 78.79. The top of the candle that you're going to be taking a look at is April the 6th, when you made a high out there of $80.38. Now, a normal pullback, a dead cat bounce, is the 0.382 area. That would have been 79.77. You're trading at 79.67 right now. This says that the U.S. dollar index wants to visit us here at Sweet 618 as its next stop. That Sweet 618 would be 79.40. Again, you're trading at 79.67. That should give some energy to these markets because we know there's at least a correlation with regard to direction, a directional correlation, not where if the U.S. dollar index goes down by one tick that the ES mini is going to go up by a point or two. We don't know that, but we do know there's a correlation, meaning if the U.S. dollar index gets weaker, our markets move higher. Again, I think what we're seeing here is just going to be a small crawl. That is on the U.S. dollar index. That means that's what the king is doing. We always need to see what the queen is doing when we take a look at this because that's the largest weighting inside there. And what you can see, the queen here is now breaking outside of its swing point candle from March the 15th. That is important. It was important to notice where the close was yesterday because you had this Gartley sell pattern, which is normal, and it's still in effect. It looks like Euro wants to trade down to this 1.29 area. But now what it's done in a normal retracement, folks, what you would do is just simply take a look at the swing point low down here at March 15th to the swing point high up at March 27th. And what it did do, it got beyond its 0.786. It made a 100% move. Now you're closing back up above that. It's just doing a breathing pattern. You're seeing the euro get a little bit of strength in it. That is what's putting some weakness in King Dollar. 877-927-6648. Let's go see how these markets are going to pop when we get right back. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insight subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow up 22 points right now, trading out at 12,827. S&P's up 2, trading out at 1370. The composite up 4.5 points. Small caps getting out of the gate a little late here, up about half a point. Leading the charge on the way up happens to be the Dow. Let's take a look at some of those active stocks out there. You got Microsoft trading up 14 ticks out at $30.48. You've got Intel up 10 cents at $27.96. Google up $5.84. I do believe earnings for Google comes out today after the bell. You've got Cisco trading up 9 cents. Apple, a little bite being taken out of a sweet apple. That is trading down $3.50 or so right now out at the 622 mark. Again, our call number is 877-927-6648. Would absolutely love to hear from you. If we take a look at what's popping and what is dropping. Well, popping, dollar-wise, you've got Google leading the charge up a little over $6 right now. Then you've got McKesson Corp, MCK. They're up 3.5%. That is trading up $3. You've got Randgold, GOLD. They're up a couple bucks this morning. That's 2.5%. You've got Fusion IO Inc. Ticker symbol on that is FIO. That's up 8%. We're going to take a look at that, see what that is trading into. Tractor Supply, TSCO, they're up $2.44. That's up about 2.5%. Rio Tinto Mines, RIO, they're up 3%. That's up $1.60. Walter Energy, WLT, they're up $1.50 or so. Rowan Cosmetics, I don't know, Rowan Companies perhaps, RDC. Rowan Companies, they are up $1.34. Union Pacific, they're up $1.80. Goldman Sachs up $1.45. Cliffs Natural, CLF, they're up. BH Billiton, they're up $1. All my IBM is up $1 as well. Occidental Petroleum and Caterpillar rounding out the stocks that are up about $1 or more. To the downside. What is grooving to the downside? You've actually got Apple, now only down about $2. Amazon right behind it, in second place, down $2 as well. Fastenal, FAST, they're down fast, only down 74 cents. So the only two stocks, dollar-wise, that are off a buck are Apple and Amazon. So not a lot on the way down dollar-wise, even percentage-wise. Largest percentage loser right now, well, that's a direction share. We won't take a look at that. That's VIX. What is the largest percentage? Fastenal down 1.5%. So let's go take a look at the markets. Let's go see what we're doing here. We've got the SPY 10-minute chart up on the screen. So let's take a look at that and see what is happening out here. As we take a look at, right now, you've got the SPYs going after the swing point that was established yesterday on the 10-minute chart, yesterday out at the 10:40 a.m. mark. At 10:40 a.m., it got to a high of 137.54. Did that with 4.8 million shares. Obviously, we're just a few minutes into the trading session, 7 minutes in. So let's go take a look. So you're going 4.8 million shares. And what is coming into right now, you've done 6.7 million shares. What's that tell you? You're trading in, so you're not, let's see, the low of that swing point is actually 137.38. You're at 137.36 right now. You got to 137.37. That swing point is going to be attacked, and I would imagine that swing point is going, that is the B point now on an A, B equals CD. Interesting. We just simply blow this chart up here. What's so interesting? You see some of that great sacred geometry that's out there. You've got a 0.382 retracement. That's really about the area where it's at. If we just simply take the ruler here, going from the low that was established on the SPYs out at 2:20 in the afternoon on the 10th, all the way up to that high that we were talking about at 10:40 yesterday morning, you will see here is the 0.382. That is where the SPYs closed at yesterday going into the close. That could be setting up the A to B equals CD. The B point on this here would be that 10:40 session, which had 4.8 million shares. So you're looking from a bullish standpoint, you're looking for the SPYs to close over 137.54 with more than 4.8 million shares. So we'll come back to that and see if it does it during the show. And if it doesn't, well, you can stay tuned, because following this show, you've got Tom and I doing the Money Masters show, followed up by Basil Chapman today. We've got Kate Stalter, go all the way back to Santa Fe, New Mexico. 3 to 4 today for the Tom O'Brien Show is Ken Shreve, and then Tom, of course, from 4 to 6. Let's go take a look at some of the other ETF indexes out there. We'll take a look at this small caps. Let's go see what Mr. and Mrs. Weakness is doing. Let me just refresh my screen here, make sure that we've got all the current data. There we go. That looks like the chart. Now we take a look at the small caps. The small caps, so Mr. and Mrs. Weakness have taken out the B point. The B point out here is at 10:55. Let's just, again, this is a 5-minute chart. Doesn't matter what time frame that you use. So we're going to take a look at that 5-minute chart. I'm just going to draw the lines on here so that you can visibly see what is actually happening, whether we're taking out B points with volume or not. In this case here, the B point at 10:55 had a high of 79.57, did 629,000 shares. As you opened this morning, 9:35, you did 1.9 million shares. So 1.9 going against 629,000. Now you have a confirmed A to B equals C to D. Let's go draw that in on the 5-minute chart here. 5-minute chart, we're going to start from the low that was put in at 3:10 in the afternoon. Low out there, 78.14. This is on the IWM, folks. We're going to come up to that high at 10:55. We're going to come all the way down to the low that was put in yesterday at 2:35 in the afternoon. A 1-to-1 A to B equals CD takes you to 80.40. Well, I would expect when you get to 80.40, you'll probably have a little bit of a timeout. Why? Because you're going to make a move of a move, 100% move of a move. You're going to get back into this range here where you should have a little bit of resistance. Volume-wise, though, I don't see anything significant up there other than this one volume spike right here at 11.15. So 11.15, that volume spike. Let me make sure it was 11.15. Let's blow this up just a bit, because I might have been looking at there. Let's see. Here's the volume bar. No, the volume bar that we're looking at is actually at, and it's got that, make sure. Yeah, 2.2 million shares, 11.20 is the time frame. So the low on that is 79.85. You're trading right now at 79.90. So you are inside that. The high on that, now, it's not wide price spread there. The high on that is at 80.01. And we'll see if any of these guys are going to take some bread off the table. Let me make sure I'm at the right thing. That's 80.01. Yep, sure enough. So 80.01, we'll see what the battle inside the small caps occurs. We'll see how that battle is handled as it gets to that 81.01. Once it clears that, folks, 80.40 is what the small caps have their eyes set on. And because you did only a 0.382 retracement, let's just take a look at that actual retracement. We're going to go take a look at our A to B leg, see where the C leg came down to. 79.01 would have been the dead cat bounce, would have been a 0.382 retracement. Actually got down to a low. Can we give it a little break? Got down to 78.97. 78.97 versus 79.01. So what I would expect here is I would expect it to take a little bit of a breather in that $80.40 area, but would expect it to get all the way up into the 81.29 area. That is on the small caps. Why? Because it only did a 0.382 retracement. When you do only a 0.382 retracement, it's got some energy that it wants to let out, and the way it will do that is through expanding price. Now let's go take a look at the Qs. Now that we got Apple back in the game, in the green, let's go see what the Qs are doing, trading out at 66.72. Let me update this screen. This also is a 5-minute chart that we're going to be taking a look at here. So let me just refresh this, make sure that we're looking at all the right data. There we go. Now we've got it filled in, and we're taking a look at the Qs. Now the Qs, are actually, so what's really interesting as you take a look at the markets, the Qs, which had been the strength, are now showing that the small caps, actually, as we take a look at the 5-minute chart, are stronger than the Qs. Small caps actually leading the charge up 0.5% right now. Not a huge lead. And the Qs right now are just simply trying to get up into the swing point. I would say it's really trying to get up into the swing point from 10:35 in the morning. The low of 66.73. You're trading at 66.73, and that's where it opened. Yeah, that was the low as well. So 66.73. So you're inside there right now. 66.73 up to a high of 66.89. That swing point has 1.26 million shares. Let's go take a look and see what we have got right now on this 5 minutes. You are at 1.0. You got 2 minutes left, so you've got 1 million coming into 1.2. It looks like it might be able to get enough volume coming in there. That, too, if we take a look at the retracement, let's do this. We're going to come off of the low. That will take you back to 2:40 in the afternoon on April the 10th. We're coming back up now into that high that we were talking about at 10:35 in the morning. That is on April 11th. That is yesterday. What you can see is so this is pretty cool. The Qs, they did come visit us at Suite 618 yesterday, but they didn't do it until 3:25 in the afternoon as they were pulling back, got down to a low of 66.28. Of course, if we take a look at our retracement from low to high out there, you'll see that Suite 618 was 66.29. How does it do that, folks? How does it do that? Well, it does it because sacred geometry works. You want to understand 618, 786, 382, and you want to understand 1.272 and 1.618 expansions. So now you are inside. You have closed inside that swing point. Let's just go ahead and put the volume bar down here on the bottom. Volume bar being right here. You can see this is the volume bar, which had 1.2 million shares. We're just going to draw that line across, and you can see that we came into that just shy, 1.25 million shares versus 1.26 million shares. You're trading inside there now. You'd like to, from a bullish standpoint, and in order to complete the A to B equals C to D, you'd like to see it take out that swing point high at 66.89 with more than 1.2 million shares. If you do that, now, if you do that, where we were taking a look at the small caps making a larger A to B equals C to D, you're taking a look here at only really making a 1-to-1 A to B equals C to D, except you do want to start watching price as it moves through this C to D leg. You want to learn to become a master of the C to D leg, folks. In this case here, it says that the Qs would move up into the 67.25 range. That would be a 1-to-1 A to B equals C D. You're trading out right now at 66.80. Let's see. We looked at the Qs. We looked at the SPYs. How about the diamonds? Let's go see what those diamonds in the rough are doing this morning. Trading out at 128.41. Again, let me update the chart here just to get all of the current data. Chart. No, I didn't want to do that. Pay attention, Steve. Let's see, refresh this screen. There we go. And so we're taking a look at the diamonds now, so we'll see what the patterns are that we have out there. The diamonds taking out the swing point here. That was at 10:35 a.m. That swing point had 145,000 shares. So let's do the same thing. Let's draw our line across the top so we know where our B point is. Let's do it on the volume as well so we can see whether it took it out with volume. We're going to come all the way down here. We're going to see that it did not take it out with volume. You can see that the volume, as it got up and closed over it, which was in the last 5-minute session, you did that with 89,000 shares, at 89,000 going into 145,000 shares. You are trading up above that. That means it can drift because it's indifferent. It can drift up to the next swing points. That's probably going to be where we would see a completion of a to B equals C D pattern. Our A point on the 5-minute chart takes you back to 2:40 in the afternoon on the 10th. The B point, that's what we discussed just a moment ago. That was that 10:35 session where you made a high of 128.29. The low that we would be taking a look at was put in yesterday at 3:50 in the afternoon as the diamonds got down to 127.74. 129.11 is the next target area on the, or 129.10 is the next target area there. You'd want to be paying attention, folks, you want to be paying attention as it makes that area. You'd want to be paying attention to the volume because this could be setting up a Tiger Gartley sell. Let's go to Andre in Portugal. Andre, thanks for calling. Thanks for holding.
Hi, Steve. Nice talking to you. I hear your show almost every day.
Oh, I appreciate that. So, Portugal, tell us about Portugal.
Well, it's not very nice here with the economy. People are quite worried about this thing with the euro.
Yes. And so in worry, how is the worry being expressed? How is it being expressed from a business standpoint, or are people pulling back? What? Help us understand that.
Yeah, the unemployment has just reached 15%.
Okay.
And a lot of people are talking about emigrating, and I think that the reality is really set in. So most people are aware of the economic situation and concerned about what is expecting if you're going to leave the euro or not. That's something that people now are really understanding.
Yeah. Now, is that being discussed in in the media, in the news media, the papers, the television, or how is that being interpreted? What do you think that you should do in Portugal?
I think that we will probably leave the euro within the next 12 months.
Really?
Now the pressure is on Spain. But yeah, the media is really terrible. I mean, we can't watch the news because every day it's bad news on TV and the newspapers. So it's a bit stressing.
Yeah. Now, do you think that the 15% is really the proper unemployment, or do you think that it's more than that?
I think it's more than that, and it's going to go up.
You do? Okay. Do me a favor, Andre. Stay with us. We're going to a break here right now. Folks, we're coming back. We're going to Portugal. That is a beautiful thing. Absolutely love it. We'll be right back, folks. You got the Dow up 58 points, S&P's up 7, Composite up 19. We'll be right back.
You've You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. And these are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. Let's see, you got the Dow up 72 and you got the DAX up 44. We're going back to Andre in Portugal, who was calling about the DAX. And so, Andre, so many questions to ask of you in only 4 minutes. So first, let me get to your question. You called in to ask about the DAX. Tell me how I can help you there.
Yeah, I would like to know the swing points on this bounce.
Okay. So the swing points, here's what I would tell you. Are you by chance watching us on TigerTV?
Yes.
Oh, that's great. TigerTV all around the world, folks. So one of the things that you're taking a look at on the chart here, and you're taking a look at the up trend channel that the DAX has been in, that the U.S. has been in. And, folks, you know, this is a one-world market. You can see where, as the market moved down into the lows on Tuesday, the bottom of that trend channel held. And right now, because and it's been tested the last couple of days, I believe that where you'll see the DAX bounce to, the first swing point that it would get to would be the swing point that's right here from April the 3rd. The low on that is 69.81. The high is 70.81. And what you'll also see, maybe you can see there's a little dotted line that I added to this channel. That is the halfway point. That is the midline. I would expect when you're inside these channels, you know, if you're taking a look at the little sine wave that was made here inside this channel where it's going from, you know, down to up and it's coming back down as it was coming up. See how this midpoint here has acted as a support or a resistance area? I expect, Andre, what you'll see as the DAX starts to move up into that area and into that swing point, that midpoint area is where where it will move to. That will act as a resistance area. The actual 0.618 number on the DAX from the move down that I'm talking about is where it was at the top of the channel, which was on March the 16th. You know, and so the top of the channel is held, the bottom of the channel has held. The 618 retracement is 69.78. So those are I'd be looking at 69.78. I would be looking at 69.81-ish, right in that range. And that's where I would then be taking a look at any kind of volume or candle patterns. But I think that's where our markets are also going to bounce to. Now if you come through that midpoint area with a wide-ranging bar, something like you can see all the way back here going into the November 30th time frame, you come into that area here, and you could rise all the way up to the top. But that's on the DAX. Do you trade an ETF for the DAX, or and how'd you find out about us here at TFNN, by the way?
Just looking online.
Just looking online. That's cool. Now,
yeah.
Do you recall what did you search for that TFNN came up?
It was actually in a forum, Global Investors.
Okay. Oh,
they talk about a lot about the TFNN.
Oh, that's really
Green
great.
Energy Investors. Green Energy Investors.
Oh, that's really great. You know, we really do appreciate you listening. And now, are you a born native of Portugal?
Yes, I am.
You are. And so you were saying that, you know, people are starting to think about maybe emigrating. Where would people typically emigrate to if they and what do people think of the U.S. dollar over there? What do they think of King Dollar?
Well, there's different opinions. People still think it can be safe, but they also understanding that with all this QE
yes.
and the massive printing of U.S. dollars, it's getting a little bit complicated. So a lot of people turning also into gold.
They are, okay. That's really very cool. Well, would you do me a favor? Would you call in from time to time, check in with us, because we'd love to know what's going on in Portugal. And there's nothing like having feet and eyes on the ground.
That's true. I will do that.
You will.
Thanks a lot, Steve. I love your show and also Tom.
Thank you. Thank you so much. Bless you. Thank you so much for calling, and have a great, now let's see, it's got to be about 3 o'clock in the afternoon over there, 2 or 3?
Exactly, 3 o'clock here.
Perfect. You have yourself a great afternoon. Folks, thanks for being here. Go conquer the world. Andre's doing it. You can do it too, folks. Stay tuned. Tom and I'll be up next. If not, have a great Thursday, and I'll see you Monday morning, 9 o'clock.